Well, I'm not a Bitcoin expert. I'm an equity manager. But what Bitcoin is telling you is it's risk on. Bitcoin is a risk asset. If the market was worried the Fed was about to raise rates or taper and that start talking about raising rates, you wouldn't see risk off on assets or doing well. You know, high beta stocks are outperforming low beta stocks. Cyclical stocks are outperforming defensive stocks. The transports are outperforming the utility. So all the inner workings of the market are telling you it's going higher. I think you'd start to see things like utilities or defensive outperforming as they did in 2019, as they did, even though the market was going up, utilities were outperforming. Not seeing that today. So I'm just looking at the underlying story of the market, and I think it's telling you that economy is going to strengthen. It's going to be a better period, at least for now.
You may be an equity manager, but these days even equity managers are sizing up Bitcoin as an inflation hedge. So I don't know what your perspective is on that from that point of view. But really, what's the portfolio construct looking like right now for you in terms of where are you building exposure and scaling back rather?
Well, I think you want to stay over, if I just in the US, I think you want to overweight value stocks and cyclical stocks, inflation sensitive stocks. Look, from 2010 through 2019, we were in a low to moderate growth environment with low inflation, and that works for growth stocks. But the reality is in the 1960s, we had high inflation and high growth. And then in the 70s, we had high inflation and low growth. And 60s, the market did very well, led by value. 70s, the market did not do well, but value outperformed. So the point of this is in an inflationary environment where inflation is growing, you want to have more value stocks, financials, materials, energies, industrials, and you want to underweight the defensive stocks that are more interest rate sensitive, like utilities and consumer staples, things like that. And I think growth will lag, but I don't see these big stocks that you've just talked about. They're not that expensive, so I don't think they'll lag by a tremendous standpoint. I just think investors tend to have more growth stocks. The S&P is a growth index, and so if in fact we have more inflation, I think there's other places besides the S&P cap weighted to make money.